What is going on? In this video today, we are talking about the DXY because the DXY has been on the rise. On Monday, we saw the DXY hit 110, and with that, we saw asset prices drop. Bitcoin dropped below 90K briefly. It's bounced back since then. We saw the stock market down, gold down, really all assets across the board were down. So in this video, we're going to talk about why the DXY is heading higher and what it means for asset prices moving forward. Could we see a big correction in asset prices coming up, or are asset prices going to continue heading higher? Before I do get into the video, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. If you're not familiar with the DXY is the dollar index, and what the DXY measures is it measures the value of the US dollar compared to a basket of other fiat currencies. Now, I personally don't think this is the best metric for looking at the value of the dollar, because the DXY is typically rising because the dollar is the best of the bunch of these fiat currencies. But when we look at fiat currencies, the dollar included, compared to assets, we could see that all fiat currencies are really inflating away. They're just inflating away at different rates. The currencies included in the DXY are the euro, the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. When we look at the currency market, one of the main drivers of value is the policy rate of the countries that issue these currencies. And when we look at the United States, the current federal funds rate is between 4.25% and 4.5%. When we compare that to some of these other countries and currencies included in the DXY, we can look at the ECB and the euro, where the policy rate is between 3% and 3.5%. The Bank of Japan's policy rate is 0.25%. The Bank of Canada's policy rate is 3.25%. So in the US, we have a higher policy rate than these other countries. And because of that, it's driving the value of the dollar higher, or the price higher, compared to these other currencies. Let's go ahead and take a look at a chart of the DXY over the last 5 years here. And as you can see, around the end of 2022, start of 2023, the DXY hit a pretty high level. I believe it was just below or right above 112. And we're nearing that level again. Back then, around the start of 2023, when the DXY reached this high level, this is when we saw asset prices really falling. Bitcoin was coming off that all-time high of around 69,000, and it fell down all the way to 15,000. The stock market kind of had a little retracement. We know that after we got that stimulus money in 2020, the stock market went on a nice rally for a while, but around this time, the stock market was pulling back as well. So it makes you think, if the DXY is heading up towards this level again, could we see another pullback in asset prices? Now, we have some news this week that is potentially driving the DXY higher. On Wednesday, we're getting that December CPI number, that inflation number, and people are anticipating that this inflation number is going to be higher. If we have a higher inflation number, that means that there is a lower probability we're going to see more rate cuts in 2025. And since the Fed started cutting rates in September, we've really seen inflation start to tick back up according to their metrics. And that is not good. That means that the Fed is kind of losing control of inflation, right? If they're lowering rates and we're seeing inflation tick back up, we're seeing interest rates go higher, we've seen bond rates really skyrocket, we've seen mortgage rates up. That is not good. The Fed does not want to lose control. According to Polymarket, there is a 77% chance that the December CPI number is going to come in at 2.9% or higher. That's a pretty significant jump from November's CPI number, which was 2.7%. And this is going to influence the Federal Reserve if we do get a higher CPI number. It's going to make the Fed think, hey, we cannot cut anymore, or we need to wait to cut until we see the CPI number and the PPI number come down, and maybe we need to raise more, right? If we don't cut and we continue to see inflation go higher, well, that may be a sign that we cut too early or we didn't raise the federal funds rate high enough. The thing is, though, the Fed is in a tough position. If you cut rates, you're going to see inflation get out of control. You're going to see prices go higher. You're going to see interest rates go higher with that, right? If inflation heads up a lot higher, then lenders are going to require a higher interest rate. Let's say inflation shoots up to 8%. Well, you're not going to see lenders lending money out at a 4% interest rate because they're losing money in real terms. They want to outperform inflation so they see their real purchasing power grow. So this is not a good situation for the Fed. They don't want to lose control of inflation, and for that reason, it's going to be difficult for them to lower rates too much. But on the flip side, if they keep rates too high, right now I think they're kind of where they want to be, kind of not too high, not too low. But if they keep rates too high and we start to see people default on their debt, there is a ton of debt out there, then things start to fall apart. And when things start to fall apart, how do they fix that situation? They increase more liquidity. They introduce stimulus into the economy. They bail out companies or other entities, and that leads to more inflation as well. So I think no matter what the Fed does, we're going to see more inflation, and really that just has to do with all the debt out there and really all the national debt that the US has, right? We're $36 trillion in debt. And with that, the US is going to need to continually introduce liquidity to push money into the economy so that there's money to buy that new debt that they need to issue. With the DXY breaking 110 yesterday, we saw asset prices drop. So let's get into some of those assets. Let's start off with my favorite, Bitcoin. As I mentioned earlier, Bitcoin dropped below 90K, but it bounced back pretty strong. Bitcoin's actually now around 97K, so it looks like it may start to head back up here. But when I look at Bitcoin, I just see too many positive catalysts in this space right now. I know that less rate cuts is not good for Bitcoin if we do get this higher CPI number. But in the grand scheme of things, I don't think it matters. We're seeing a lot of adoption when it comes to Bitcoin. We're seeing companies start to copy MicroStrategy to a certain extent and have a Bitcoin treasury. Companies aren't putting all their money into Bitcoin, but some companies are starting to put a small portion of it into Bitcoin, which is awesome. And the more companies that hop on board with this strategy, the higher we're going to see the Bitcoin price go. We've seen a lot of institutional adoption over the past year or so with the ETFs, and I expect these ETFs to see good inflows in 2025. And then we have the prospect of nation state adoption. There's been a lot of buzz here in the US that we could have a strategic national Bitcoin reserve. I'm not sure if it's going to happen or if it's going to be something that's going to happen on the low, but I definitely think we are going to see nation states stacking Bitcoin in 2025, whether they tell everyone or not. And I think that recently, with this recent rally in Bitcoin, some nation states probably have started buying a little bit here and there. We've also heard rumors that there could be executive orders around Bitcoin happening on day one of this new Trump administration. Not sure if these rumors are true. We've heard rumors before in the Bitcoin space, but maybe that's fueling this bounce back in the Bitcoin price over the past 24 hours. And it will be interesting to see where the Bitcoin price goes when Trump gets into office over those first couple of weeks. I'm excited to see it. Who knows? We may stay around this 100K level for a while, or we could shoot up higher, which would be awesome. Overall, I think 2025 is going to be a really great year for Bitcoin. And anytime you see a pullback in the price like we did on Monday, I just say thank you for the discount and buy more, because we are going a lot higher this year. Now let's get into the stock market, which was also down yesterday. The S&P 500 is down 2.94% over the past 5 days. And with the DXY rising, with the dollar getting stronger compared to these other currencies, is the stock market in danger? Could we see a significant stock market correction this year? I've heard a lot of people talk about over the past couple of years this big stock market crash that is going to come. But when I look at the outlook, and I just look at the outlook for the US dollar and the continued dollar debasement that I see, I find it hard to believe that we're going to see a huge stock market crash. If we go ahead and take a look at a chart here, this shows the S&P 500, it looks like over the past 150 years pretty much. And as you can see, around 1970, 1980, 1990, this chart really starts to tick up. You might be thinking, oh, we must be nearing a crash. Look at this chart. Look how much the S&P 500 has risen over the past 30 to 40 years. But when I look at this chart, it tells me a tale of dollar debasement. When we consider the denominator, the US dollar, and how much it has depreciated over the last 50 years, that's what this chart shows me. The more the dollar depreciates, the higher we're going to see stocks go. And I see that continuing. I feel like being in the dollar or in treasuries is a losing bet. And while I don't think the stock market will hedge against dollar debasement as well as Bitcoin, I think that the stock market is accessible. I think that it's a place where people can afford to invest, unlike a place like real estate. And I think that when you look at a lot of these companies, they're continuing to perform. I looked at the earnings for some large companies like Nvidia, Meta, Netflix, Microsoft, and they continue to beat their earnings expectations. And unless we see the economy really fall off a cliff, I just feel like people are going to continue putting their money in the stock market because they need a place to hedge against the devaluing dollar. A lot of people aren't comfortable with Bitcoin yet, and for those people, the stock market is a pretty good option. It continues to perform very well. Now, with that said, stocks are businesses, and if we see some signs that the economy is slowing rapidly, then that could change the outlook for the stock market. And I don't think that most stocks are going to outperform Bitcoin in 2025. If we see consumers start to slow down, if we see continued layoffs like we saw last year and more bankruptcies, then these businesses may see less business, and with that, they could see the revenue drop, and we could see the stock market drop for a period of time. But overall, long term, I think that people are just going to be looking to get out of the dollar, and the stock market is going to be a good accessible option for a lot of people. The main thing I worry about with the stock market is overexposure to the existing fiat system. Let's say we are to have a continued banking crisis or some sort of significant credit collapse. And if a lot of these companies are overexposed to the crisis or collapse, then we could see those companies take a big hit. I think that companies who are more exposed to an asset like Bitcoin are going to be a lot safer, because Bitcoin really isn't too attached to the whole existing fiat system. That's going to wrap it up for this video. To kind of recap, the DXY will probably continue to move higher as the dollar outperforms other fiat currencies. But I think the general theme for the next 5-10 years is going to be fiat currency debasement. And because of that, people are going to look to get into assets like Bitcoin or stocks. And really, those two assets are two main places because they're very accessible. If you have $1,000 to invest, well, you can put that into the stock market or you can put that into Bitcoin, but it's a lot harder for you to invest that in other areas like real estate. So I think that the stock market and Bitcoin should continue to trend upwards as the dollar trends down. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.